Today we have with us Mr. Vijay Kumar. So we welcome you for this meeting, sir. So to give a brief introduction about sir graduated with a BA degree. Sir has about 5 years of experience in the BPO industry. Later on which sir got interest in the personal finance field. So later sir shifted to the finance industry. So yeah, this was a brief introduction about Mr. Vijay Kumar. So now Justin would continue with the questions.
So my name is Justin. I would like to ask the first question. So my first question is, what are the key points when analyzing a company?
Yeah. Before investing into any stock, first we need to understand what is their business model, how business really works, so how they are making money. Is it a product company? Is it a service company? Is it a domestic company or is it an international company? So, what is the competitive advantage they are having? How they are different from others? What is their plan? How they want to grow in the future? So, who is the leadership? What is the experience they are having in the industry? What is their strength? How financial metrics are? And last one is valuation. So, these are the factors you need to identify before investing into any stocks.
Thank you for that answer, sir. So the next question is, how is a competitive advantage important for a business?
Yeah, sure. First, we will understand what do you mean by competitive advantage. So it can be any industry or anything. If you want to get success, you have to be something different from others. Then only you are going to get the success. In the same way, in a business, if you want to get success, you have to be something different from others. For that, we call it as a competitive advantage. So you can call it as a strength. So I would like to give some of the example. So Apple, which is one of the fastest growing company in the world. So nowadays Apple, which is growing very faster. So some of the competitive strength of Apple is the first one is the brand presence. The brand presence which is there across the world and high quality product. People love to use Apple phone. So that's the reason Apple, which has been growing very faster. I will give some more example. In Indian FMCG segment, Hindustan Unilever, which is one of the fastest growing company in India. So some of the strength of Hindustan Unilever is a strong product portfolio. So with regards to personal care product, home care product, and food and beverage category product. So they're having good product portfolio. Along with that, they're having strong distribution network. Once you manufacture the product, you should have a strong network to the reach to the end consumer. So then only it will make a lot of sense for you. If you don't have strong distribution network, you will not be able to reach to the end consumer. So that's the reason Hindustan Unilever, they are leader in FMCG segment. I will give one more example. So nowadays in Indian retail industry, DMart, which is growing very faster. How DMart is growing, how DMart is different from other competitors. What DMart will do is they will buy the product from manufacturer in a bulk. So when you buy the bulk, so you will get you will have more bargaining power. After that, they will sell it to the consumer in a discounted price. So that's the reason DMart is growing very faster right now. For that, we call it as a competitive advantage. It can be any company. If you want to sustain for a long time, you should have some a competitive edge.
Okay, so thank you for that question. Thank you for that answer. So another question that I would like to ask is, how industry dynamics and trends will change over time.
Okay. Change is the law of the nature, law of the universe. So even we will also change every day. World will also change. So ultimately, change always change will happen. In the same way, industry will change. Industry dynamic will change. I will give some example. So earlier, telecom industry, we used to use landline. So only used to use landline. So later we shifted to mobile phone. So in that time, what we were doing, only we were calling and we were getting message. So after that, now we are shifted to in mobile phone, we are calling as well as we are aggressively using internet. So for that, we call it as a value migration. I will give some more example. Just some 5 years back, if you want to open bank account, we used to go physically bank and we used to fill the application, then we used to open a bank account. And if you want to take some cash, so you need to go to ATM or you need to go to bank. If you want to transfer some fund, you need to give check. Yeah, we were used to give the check. And so most of the transaction, cash based transaction was happening. But right now situations are completely changed. If you want to open a bank account, you no need to visit to bank. So now you can open online. If you want to transfer money, if you want to transfer some money to your friend or relatives, so there is no cash transaction, so everything is going online. So banking industry now it has become a fintech industry. As well as just on some 5 years back, if you want to purchase something, you used to go physically to the stores and we used to buy. So after COVID pandemic, retail industry, which is growing very faster. So nowadays, if you want to buy something, we are placing online. So this is how all the time industry will change, industry dynamic will change. So for that, we call it as a value migration. So I will give one more example. So just 5 years back, we never thought that we are going to learn a lot of things online. So in country like India, we never thought that e-learning industry will never grow in India. But right now, so most of the people are we are learning via e-learning industry, which is growing very faster. So this is how all the time industry will change, industry dynamic will change.
Okay, so thank you. Next few questions will be handled by Kamarna sir.
Hi, sir. I'm Kamar Nissa. And as we talk about the financial metrics, what are the key financial metrics you should look while analyzing for company's performance?
Okay. The first one is profit and loss statement. So whether they are making good profit or not, that we need to check. The next one is return on equity. The third one is return on capital employed. Next one is a debt to equity ratio. So these are the EPS. There is a ratio called EPS ratio. Next one is PE ratio. So these are the main five ratio we need to check before analyzing any stock.
Okay, sir. The next question is, can you explain the process of fundamental analysis of stock selection with an example?
Sure. Okay. Yeah, can you please give me the screen share access?
And so just
So now you're able to see my screen.
yeah, sir.
Okay. So before I will explain with one example, there is an application called a screener. So first you need to create one ID password in the screener application. So after that what you have to do? So if you want to search any company, let's say that you want to search a Titan company. So you have to write here. So after that company name will come. So here company information will come about company, their key businesses, all the information will come here. If you come at last, you can see here, if you come at last, so there is a PPT here. You can see here PPT. So you can see here PPT will be there. Here company ka entire information will be there with regards to their business model, so their future plan, everything will be updated here. For that we call it as a investor presentation. Here what you need to do is yeah, you can see here all the information will be there about company, Titan journey, Titan at glance. So here you need to check business segment. So in the business segment in Titan, there are around five segments. The first one is jewelry segment. Next one is watch and wearable segment. Next one is eyewear segment. Next one is fragrance segment. Next one is fashion and accessory. Next one is dress and wearables. So you need to go to individual segment. and you need to read everything. So if you come to jewelry segment, so Titan runs some of the jewelry brands. The first one is Tanishka, Mia, Joya. The two manufacturing plants are located in, one is Hosur, which is from Karnataka only. Next one is Patnagar. So you need to read everything. If you come to watch segment, some of the top watch brands are Titan, Fast Track, Sonata, Nebula, Raga. So you need to go to each and every segment. You need to read everything. You need to understand everything. So then I will decide whether to invest or not. After that, I will decide whether to invest or not.
Okay, sir. Thank you. And the next question is, how do you assess the financial health of the company?
Okay. Here we need to check whether they are making consistent profit or not. It can be any business. If you want to sustain for a long time, so you have to make the consistent profit. The next one is whatever the profit they are making, they have to reinvest into the business. So it can be any business. If you want to grow, if you want to sustain for a long time, whatever the profit you are making, so that profit you have to reinvest into the business. The next one is company should have less debt to equity ratio. So it can be any business. If you get a good profit, but if you have a higher debt, first what you have to do, you have to pay the debt amount. So that's the reason company should have debt amount. So,
So thank you, sir. Let's say after assessing the financial health of a company, let's say I have invested a stock in it. How can I decide when to exit the stocks?
okay. To exit the stock, I will give two scenarios. So let's say that you have invested into the particular stock. You right now you have invested. After some 5 6 years, we feel that there is a growth. There is no more growth in the industry. There is no more growth. The stock has already reached to the peak level. So stock has already grown a lot. Stock has already overvalued. For that, we call it as a super expensive. So in that time, you need to book the profit. So whatever the growth opportunity company had, business had, already that growth is already done. In that scenario, you need to book the profit. The second one is when there is a change in the fundamentals, when there is any scam. In such scenario, you need to exit from the stock.
So research is considered to be an important factor while investing in stocks. So like how important are management presentations and earnings calls?
Okay, so as right now I have shown you the investor presentation. No? This is the investor presentation. So here every data will be there with regards to their business model. So here every data will be there with regards to their business, how business works, what is their product, so what is their competitive advantage, how they want to grow in the future. Each and every data will be available in investor presentation and conference call. So that's the reason we need to deep dive into investor presentation. So then only we will get the bigger picture.
Thank you, sir. So can you share what software tools can be used to research the stocks?
Yeah, to research the stock, I will use three of the software and application. The first one is this one. For this application, we call it as a screener application. So can you all see this screener application?
Yes,
Yes,
sir.
sir.
Yeah, you can search for the any company. Just now I've shown you the Reliance company. Now I will show the sorry. Right now I'll show you the Titan company. So now I will show you Reliance Industry. So if you type the Reliance Industry, every data will come here. So here again PPT will be there. So this one is very important application, the Reliance business. So Reliance has majorly three business. One is Reliance Geo. Next one is retail industry. Next one is oil and gas business. So Reliance has multiple business. So you need to deep dive into all the presentation. The first one is screener application. Next one is money control. So after that, what you have to do, you need to visit to company website. So you can see here Reliance Industry. So if you type, you can see here. So you need to go to company website. Here all the data will be there. Everything about company from beginning to end. So whatever the plan they are having, each and every data will be here, available here. We need to deep dive here. So then only we'll get deeper understanding about the business. So for, major application is one is this screener, next company website, money control. So, yeah, these are the applications
Thank you,
we
sir.
need to use.
Now Shivani will take over.
Good evening, sir. I'm Shivani, and I have a couple of questions. So, my first question is, what factors do you actually consider in this valuation process?
Okay, first we will understand what do you mean by valuation. So valuation is nothing but if you want to buy anything, let's say that you want to buy pen. For pen, let's say the minimum amount we can pay for normal pen, we will pay around 10 rupees. If you increase price by 15 rupees or 20 rupees, what you will do, you will hold it for some time. So 15 rupees is too much expensive. In the same way, if you want to invest into any stocks, so there is a ratio called a P ratio. If you identify with that P ratio, what we will come to know is it right now it is a super expensive, or is it a discount level, or it is a normal level. So for that we call it as a valuation. So P is the one of important ratio. With that P ratio, we will identify, we will come to know. So right now it is a expensive or discounted level.
So my next question is, from your experience, what do you feel are some of the red flags in the valuation process?
Okay, so red flags. There are red flags we will come to know when you're investing into the stock. The first one is inconsistent profit. So it can be any company. If you want to sustain for a long time, you have to make regular profit. So then only will sustain for a long time. Second point we need to check. Sometimes some companies they will get 1 year they will make huge profit. Next year immediately they will come into the loss. So these are not good sign. So company has to make consistent profit. So let's say company every year it has to grow with a minimum 15 percentage, 15 to 20 percentage it has to grow, because below that, so inflation itself in India, so it will be around 5 to 7 percentage. So that's the reason company has to grow minimum 15 to 20 percentage. Inconsistent profit that we need to avoid. So next one is if there is any scam in the company, if there is any scandal in the company, in such scenario we need to exit. That is the red flag.
Okay, sir. Having all the information in hand and knowing all the information about the company, how do you decide or how do you build a balanced portfolio of stocks?
Okay, so if you want to build a good balanced portfolio, so there are three companies in the market. The first one is large cap company, second one is mid cap company, third one is small cap company. First, I will explain what do you mean by large cap company. Large cap company is nothing but a well-established companies. So, well-established companies such as a Reliance, such as a Titan, HDFC Bank, so ICICI Bank. So these companies, they are the leader in their respective segment. So HDFC Bank, ICICI Bank, they are the leader in banking segment. So banking segment. So that's the reason. So in the early stage, what we have to do, we have to have higher allocation into the large cap stocks because they are less volatile. So they are having less risk. So after that, what you have to do? So you have to invest into the mid and small cap company. What do you mean by mid cap company? Mid cap company, they are in the phase of growth and expansion. The next company is small cap company. Small cap company, so they are in the phase of just startup. So these mid and small cap company, they will be having higher risk. So that's the reason if you are investing 100 rupees, around 70% of money you have to invest into large cap stocks. Next to 30% of money you have to invest into mid and small cap. So in meanwhile, you should have good amount of allocation into the mutual funds also. So mutual fund, large cap stocks, mid and small cap stocks. So you should have good balance between all four of them. Then only you are going to create a balanced portfolio.
Thank you for all those answers, sir. Now Varun will take over.
Good evening, sir. So we have
Yeah.
final 3 questions here. So, sir, what do you mean by mutual funds and how does it work, sir?
Okay. So mutual fund industry in India, which is growing very faster nowadays, mutual funds are getting more and more popular. First, we'll understand what do you mean by mutual fund. So mutual fund is nothing but so you are very much interested into the investing into the Indian equity market. But if you don't have enough, but if let's say you are a working profession, you are a student, you don't have enough time to research the right stock, because researching a right stock, it's not easy. It's not a cakewalk. It's required a lot of skill, time, and effort. So most of the working profession, they don't have enough time to research the right stock. Then mutual fund will come into the picture. In the mutual fund, they will hire some experts. For them, we call it as a fund manager. They will be having 10, 15 years of experience in the industry. They will be having a team. So behalf of us, what they will do is they will research the stock. They will identify the stocks are which is expected to grow in next 5 years, 10 years. So behalf of us, they will invest into the quality stocks. They will invest into the securities. They will generate the return. So whatever the return they have generated, again they will pass back to the mutual fund investor on a pro rata basis. These fund managers, these experts, they will take they will take some fees. So this is what mutual fund.
Okay. Thank you, sir. So my next question is, what are the common mistakes that new investors make?
Okay. So most of the new investors, once they enter to the world of stock market, they will commit a lot of mistake. The first one is they will invest based on the tips and tips from their friends and relatives. So somebody says that they will be having any knowledge about stock market. They say that just invest into these stocks. So sometimes they may work, but in the long run, it will not work. These tips will not work. So most of the retail investors, they will commit this mistake. They follow the tips from their friends and relatives. The next one is trading. So once you come to the stock market, you will be having two options. One is investment. Second one is trading. Investment is a long-term game. If you invest into quality stocks, quality business, in the long run, you are going to create a huge wealth. Second one is in the short term. If you want to make money in stock market, so there is an option called trading, but trading is not easy as we think. It's required some 2 3 years of practical experience in FNO market, as well as you should have good theory knowledge about technical analysis, candles, resistance support. Then only you are going to make in trading. Most of the retail investors, they fail in trading because trading it requires huge. So it's a full-time job, so that's the reason most of the retail investors, they fail in trading. Next one is so most of the retail investors, they will invest for a short term in the stock market. If you want to create wealth, if you want to get success in the stock market, you should invest for long term. You should invest for 5 years, 10 years, 15 years. You need to invest into high quality stocks. When you invest into the high quality stocks, so then only you are going to create wealth. So most of the investors, they will only invest for short term. So as well as in stock market, so in the short term, there may be going to be a lot of problem, lot of volatility. So in such scenario, so most of the retail investors, they will exit from the stock market. In the long run, they will miss bigger picture.
Yes, sir. So my final question is, sir, we'll all be getting into the field of investing. So what a few advice you would like to give to us, sir?
Okay. So my best advice would be, so it can be anybody. So new investor or old investor. So if you want to create wealth in the stock market, the first what you need to do is first you need to understand the business. So let's say you are investing into Reliance company. So what you need to do is you need to understand what Reliance is doing, what is their business. So how they want to grow in the future, what plan they are having, who is the management, how they are capable to manage all the business. All the business, you need to deep dive into the business. You need to understand each and everything. Then only you will get then only you will get the confidence, then only you will get the conviction, then only you will get the courage. So you have to do a lot of homework. Most of the people they will not do homework. That's the reason they will fail here. The second advice would be patience and invest for long term. So it can be any industry. If you want to get success, so let's say you are having good amount of skill, good amount of talent, but if you don't have enough patience to travel your own way, then it doesn't make any sense for you. So that's the reason you should have good amount of patience, and you should always think for the long term. Then only you are going to succeed here.
Yes, sir. So, sir, with this, we come to the end of our meeting. So, we would like to thank you for sparing time for us and doing this interview with us. Yes, sir, I think this was a very interactive session, and hope we all gain and learn from your advices. So, thank you, sir.
Okay, thank you so much. Thank you.
Thank you, sir.
Thank you, sir.
Thank you. Thanks.